Welcome to The Explainer. Today we're doing something a little different. We're performing a technical autopsy on a stock that has basically vanished, using a real analyst's report to figure out what on earth happened. So check out this number, $26.03. This was the 52-week high for a company called Mingteng International, ticker MTEN. This was the peak, the high point when investor confidence was through the roof. And then there's this. 3 cents. That was its price on January 17th, 2026. We're talking about a near total wipeout of value. So that brings us to the big question. How does this even happen? How does a stock just lose 99.9% of its value? Well, let's put on our detective hats. We're going to use technical indicators as our clues to solve this mystery. First things first in our investigation. We've got to figure out if this was a sudden, overnight disaster or more of a long, slow burn. We need to look at the backstory. Now, to get that bigger picture, analysts use a really important tool called the Simple Moving Average, or SMA. Think of it like this. It smooths out all the crazy day-to-day price swings so you can actually see the real underlying trend. And wow, just look at the gap here. It's not just that the current price is a little below its average. The stock is trading at 3 cents, while its 200-day average price is over $8. They're not even in the same ballpark. This tells you right away this wasn't a sudden crash. This was a long, painful bleed out over months. And this downtrend wasn't some gentle drift either. There's an indicator called the ADX that basically measures the strength of a trend. And here, it's over 25. That's a huge sign that this downward slide had some serious power, some real force behind it. Okay, so we've established it's been in a long, nasty decline. But is there any life left? Is there a pulse? To find out, we're going to look at what are called momentum indicators. Let's start with this idea of a stock being oversold. You hear this term a lot. It just means there's been so much selling that the price has been pushed way, way down. And sometimes that can attract bargain hunters who think a rebound is just around the corner. And yep, the data confirms it. The stock's RSI, you can think of it as a kind of momentum thermometer, is at 23.37. Now, anything below 30 is considered deeply oversold. So you might look at this and think, hey, maybe there's a glimmer of hope here. But not so fast. As the analyst report warns us, in a catastrophic downtrend like this one, being oversold is pretty normal. It's really more of a symptom of how sick the stock is, not a sign that it's about to get better. And this is the real nail in the coffin. The money flow index, which measures buying pressure, people actually willing to put money into the stock, is at 0.495. That is practically zero. It's a crazy rare reading that tells you just about nobody is willing to buy this thing. If we're doing an autopsy, this is the moment we check for a pulse and find absolutely nothing. Now let's move on, because all of this creates a picture of extreme volatility. And that comes with a very specific warning for any speculators out there who might see this super low price and think it's an opportunity. So there's this other tool called Bollinger Bands, and they measure volatility. For this stock, the bands are stretched incredibly far apart. A good way to picture it is like a heart monitor that's going completely haywire. It is a textbook signal that a stock is in deep, deep crisis. A situation this volatile can create a really dangerous trap for traders. It's known by a pretty grim name, a dead cat bounce. The idea is that even a dead cat will bounce if it falls from a great enough height. It's a small, temporary hop in a much bigger fall. And this slide just nails the psychology of that gamble. You see a price like 3 cents and you think, come on, it can't possibly go any lower than this, right? So you jump in, dreaming of a quick pop to 6 cents for an easy 100% gain, all while completely ignoring the mountain of evidence that this thing is still in total freefall. All right, so after looking at all the evidence, after following all the clues, the analyst report brings it all together for a final verdict on Mingteng International. And the summary is just grim. It reads like a rap sheet. The evidence is just overwhelming. You've got the catastrophic trend, zero buying interest, and something called massive distribution, which is just a technical way of saying the big, smart money has been selling and getting out for a long time. So the final official diagnosis from the report is extreme distress. It makes it crystal clear that the only potential left here is for a purely speculative and probably very short-lived bounce. And the report leaves us with this classic piece of Wall Street wisdom. Do not attempt to catch a falling knife. It's such a perfect metaphor, right?
Trying to guess the exact bottom of a stock that's crashing this hard is just as dangerous and unpredictable. You're probably going to get hurt.
So I think the big takeaway here is how technical analysis can tell a story. Every single one of these indicators was a clue, and they all pointed to the same conclusion. It really leaves us with a final question. When a stock's value has been so completely wiped out, are you still doing financial analysis, or are you basically doing corporate archaeology, just digging through the ruins?